Good day. In this video, I'm going to look at question number 3.2.1, but bullet number 1, operating profit before changes in working capital, and I'm using the Eastern Cape, June 2021. Operating profit before changes in working capital. Now, this is a cash flow question. Actually, it's a portion of note number 1 to the cash flow, operating profit before changes in working capital for a total of 6 marks. So the most important thing when they give you that kind of question is to actually know the structure of what you need to do. So the first thing that you need there is your net profit before tax. And then you're going to have your adjustments in respect of the first thing that you need to adjust for is depreciation. The second thing is interest expense. Okay? This is what you need, and then this is going to give you your operating profit before changes in working capital. Now, so if you go back to the information provided, you will see that you are not given the net profit. So you are given the net profit before tax. So this one is going to be very straightforward, because the net profit before tax is given here is 1650. So this is going to be 1650. Okay, then you need to adjust in respect of depreciation, which is also provided 578050. So it's 578050. And then interest expense, there is a question mark on interest expense. Okay, so your interest expense is provided on adjustment number F, right? That's where you have your interest expense. It's on adjustment number F. So it says here, the loan statement received from V&R Bank on 30 June reflected the following: balance at the beginning, and then repayments, and then interest capitalized, and then balance at the end. And this figure here is the one that we need in order for us to adjust our net profit, for us to get operating profit before changes in working capital. Now, remember, now what I can do is I can actually just reconstruct my loan statement and show you what is actually supposed to be done in order to get the interest expense that you're looking for. Now, I'm doing this for the sake not only of the cash flow, but I'm doing it for the sake of the balance sheet as well, because you can be asked to calculate that for the income statement or for the balance sheet. Okay, so what we are saying is that if I look at this information here, I just want to copy these figures. It's 789,140, 231, 670, question mark, and then 670, 890. So these are the figures that you have, right? And then this is your balance at the beginning. These are your repayments. This is your interest that is to be capitalized. This is the balance at the end. This is the balance at the beginning. Now, you need to remember that a repayment reduces what you owe in terms of the loan. Meaning to say this figure here is actually supposed to be in brackets, because repayments reduce what you owe. So we are saying we had 789,140 in liability, long-term liability of the loan at the beginning of the year. We paid 231,670, but also remember, when you make this payment of 231,670, that payment includes the capital portion of the loan and the interest portion, especially in this scenario where you are told that interest is capitalized. Capitalizing meaning to say the interest is added to the loan to increase the loan balance. And then this gives you a balance at the end here of 670. So if you want to calculate this loan here, the easiest way of doing that is to actually do a bottom up there. You start working from the bottom going up. What does it mean? It means I'm going to start my calculation with the 670. But what do? I add this, I reverse the sign. So when you are going up, you reverse the sign. So I'm adding this and subtracting that. So meaning to say my calculation is going to be 670, 890 plus 231, 670 minus 789, 140. That's how I get my interest. my interest expense. So I can actually come on the answer book itself and do the same calculation to say my interest is going to be 670, 890 plus 231, 670 minus 789, 140. That is my interest calculation there. So let me just punch it on your calculator. So 670, 890 plus 231, 670 minus 789, 140 to give me 113, 420. Now, meaning to say, if I now want to calculate my my operating profit before changes in working capital, I must say 1650 plus 578050 plus 113420. That gives me 2341. It's 2341470. You can verify these figures with your calculator, which is 2341470. That's what I'm getting here for my operating profit before changes in working capital. It's very critical before I finish this video for me to show you that in this interest rate, in this interest expense calculation, please don't just plug in that final figure there. It is always advisable to put all workings in brackets so that in case you make a mistake in calculating, you can still get method marks there. That's why even on the instructions and information, the examiner always says please show your calculations in order to earn party marks. But that's how you're going to calculate your operating profit before changes in working capital. Thank you.